Hello and welcome to this episode of the Digital Disruption Podcast with Pete Gatenby and myself, Chris Williams. Today's episode is all about AI in credit scoring and lending decisioning. We're going to be digging a bit deeper than in previous episodes where we've kind of just scratched the surface of AI and machine learning and digging into specific use case that we're actively working on and seeing in today's world to help you on your journey with artificial intelligence. Well then, Pete, we've got today's topic. We're going to go a bit deeper with AI and machine learning, specifically now going into sort of credit scoring and lending decisioning. It's a bit of a mouthful. Before we get into that, how's things? You've been on holiday looking a bit more bronzed.
Mate, it was great, thank you. Bobbing around on a boat in the ocean was lovely. It was nice, thank you.
Fantastic. Well, I'm sure there wasn't too much AI going on there, but talk to us a little bit about what's happening in market. It's coming towards the end of March.
Yep.
There's lots happened in the last last quarter, to be honest. We know that these things are moving at pace, but tell us a little bit more about, we've got Nvidia's done their recent updates and sort of annual gathering, shall we say, but talk to us a bit more about what's going on.
Absolutely. So, of course, AI is moving 1,000 miles an hour. It's showing no signs of slowing up at all. Last week, Nvidia did their biannual. They do a couple of conferences through the year, but this is their main one, GTC AI conference. And some really, really interesting things came out of that. We had the robots, we had the art that they generated, which was pretty cool. If you haven't seen that, go have a look. It's something to see. But some really interesting remarks, actually. And one of the most interesting things, and definitely sparked a debate with some of the colleagues that I was working with at the time, from the CEO, from Jinsong Huang. Forgive me for butchering that pronunciation. But he opened up the conference with quite an interesting remark. I'll just read it actually verbatim because it is really interesting. He essentially said, "It's going to sound completely the opposite of what people feel. You probably recall over the course of the last 10 to 15 years, we definitely do, almost everybody who sits on a stage like this would tell you it is vital for our children to learn computer science. Everybody should learn how to program. In fact, it's almost exactly the opposite. It's our job, being Nvidia, to create computing technology such that nobody has to program and that the programming language is human. Everybody in the world is now a programmer. This is the miracle of artificial intelligence." Now, some quite bold things in there to unpack. Now, we will come to AI in credit scoring and how that is the home buying process soon, but this is really interesting because Nvidia are on a mission to remove the blockers for people to become programmers. Now then, there's definitely two trenches of thought here. Those who are celebrating in the fact that anyone could go to one of Nvidia's tools and start to develop applications very, very quickly using a human language, i.e. say, I want to create a dashboard to see how my contact center is processing mortgage applications today. And it would start to build that, and through a number of what we call prompt engineering, you would begin to build out that interface, build out the code that sits behind it, and actually be able to deploy it. That's where Nvidia is going. That's their mission. But then on the flip side, there's the opposite side of the equation, which says, well, look, artificial intelligence is still artificial. It still requires engineering and development skills to obviously make it work, because somebody has to be evolving the Nvidia product. Somebody has to be evolving whichever stack you're talking about, right?
Yeah.
Somebody has to be evolving it. And those level of engineers are obviously hugely intelligent, very well trained, very experienced development teams and squads of people. How do they get the skills that they need to if they're no longer doing the tweaking and the bedroom development that you or I are used to witnessing and working alongside those engineers who do that? Because the traditional kind of path for a developer, and very much the ones, pretty much every developer I've worked with followed some way this path, which is they were interested in technology. They started tweaking with technology in their bedroom on a laptop or something borrowed from somebody. They got the bug. They either then went down a voyage of self-learning, or they went to a more traditional institution to learn computer science. Then they found themselves a job, got more experience, and learned from their peers how to become better and more experienced and become more advanced. Now, what's actually really interesting is when you start to look at the architecture of how computers work and how these systems work in themselves. Now, whether you're talking cloud computing, physical computing, whatever it might be, right? There's layers which start with physics at the very, very bottom layer, all the way up to applications at the very top layer. Now, I believe that Nvidia will be able to get to the point in which applications can be built by the average Joe without the ability or the need to code. But then as you get down the layers, you get to more advanced when it comes to how hardware and software interact, how it comes to more advanced engineering capabilities, then absolutely they're going to need those skills. So I think I think it's a bold mission. I think it's a good mission statement for him to set the agenda for the conference itself. But I don't think we're going to be quite there in the next couple of years, and I don't think we're going to be quite there in the black and white sense of which he describes in that statement.
That is interesting. I was going to actually ask the question: how far off are we from that? In your view, we're a little while off it yet. Having said that, things are moving at a very fast pace. It seems to me as though it's very important that all organisations within the sort of home buying process, whether you're irrelevant of whether you're a lender, but other vendors within the space, other actors, stakeholder groups have got to be looking at AI.
Yep.
I think that the threat to the market is even bigger. I mean, this is a process. The home buying process, the property buying process in the UK is complex. It is fraught with challenges.
Yep.
It's got better from a technology standpoint over the years. But the reality is, I mean, we did we had some research work done recently, and some of that research work basically told us that over the last 10 years, the customer experience has gotten worse. Customer complaints are higher in terms of the mortgage application process versus what it was 10 years ago. That's what our research suggests.
Yep.
And has been backed up, and we're happy to publicise that. So whilst that being the case, it says to me that the threat is even bigger, because it's not necessarily the threat directly to market from incumbent competition. It's actually or the threat from AI. It's actually the threat from people getting that frustrated with the process that they're going to come into the market and think, do you know what? I no longer need the resources that I once had. And I think that's a really, really important point. We no longer need the level of resources we once had in order to disrupt an industry sector, in order to make something better, because I can essentially go and use an AI capability to actually create the application, cloud native, with all the security, with everything else that's needed to be able to really disrupt something. And I think that's the big threat, and a very important point that people really have got to start to get their heads round. I still think there's a level of arrogance, dare I say it, about this won't touch us just yet.
Absolutely. And we saw it in mobile. And we often go back to mobile because it's a world that we worked together a long, long time in, and had a lot of experience in. But we saw it in mobile.
Yeah.
There was an arrogance, especially in financial services, that the technology that they had was so advanced that people wouldn't be able to touch them. And actually what happened...
Or the ones that were coming through the ranks, they just felt, well, we'll just buy them.
Exactly. And what happened was you had the neobanks, the Starlings, the Revoluts, the Monzos of the world that developed better products faster because they were no longer constrained by their legacy stack. They had no legacy kind of infrastructure and everything else holding them back. They just saw a problem in the market and engineered a solution and took it to market quick. I believe that AI and the winners in this AI arms race that we are absolutely in the midst of are going to be those that take these learnings and say, well, actually, yeah, we don't need and we can develop products quicker because we know we can develop the application line very, very quickly using prompt engineering.
Mm-hmm.
But actually, let's therefore refocus our high-value resources on the infrastructure side of things, because we know that the infrastructure is, and the legacy infrastructure in core banking systems that exist in large lenders, or if you go on through to the conveyancing side, they've got similar problems. We know that they can redeploy the high value resource to fix those large problems that are actually bigger constraints, and therefore it gives them the competitive advantage in the market to deliver a better customer experience, which in truth is what's going to win.
Yeah, yeah. So let's go a bit further down now into credit scoring and lending decisions, because this is a particular area of use cases that we've got quite a bit of interest in at the moment.
Yeah,
Obviously
absolutely.
something that you're very close to. Just give us an overview of sort of where we're at with this and sort of where, I guess, where AI is really, where there's an opportunity, let's put it that way.
Cool. So on the AI front, it's going to be big in the next few years in the credit scoring and lending decisioning process. Now then, if we just take a couple of steps back in terms of how artificial intelligence is really going to add benefit to the process, it's going to allow us, as a collective group of people in the home buying process, to be able to assess larger, previously untouchable elements of information and make credit scoring decisions on that. So what does that mean? Now, I put an example on my LinkedIn just the other day, actually, that around a very kind of simple example. Your social media posting. Artificial intelligence now has the ability to not just interrogate the large amounts of data when it comes to your transactional history, your borrowings, your credit cards, your leverage on those credit cards, etc., etc. It now has the ability to start to delve into other previously untapped areas. Take social media. We can now use artificial intelligence to analyze people's behaviors away from their credit cards, away from their bank accounts. So if they are in Dubai every weekend, I use Dubai as a really clear example because people can spend a lot more. We've been out there for research purposes, right? People can spend a lot of money very quickly in Dubai, especially if you're looking to have cocktails on the palm. You're going to.
I feel it might have just landed me in a bit of trouble if my missus watched this. We were there for research purposes.
Yeah. No, very few cocktails were had. In fact, it's funny I had to use a picture of me in Bucharest because I couldn't find a picture of me with a cocktail in Dubai. So that says everything you need to know. But if artificial intelligence can now analyse that data of someone's public social media presence to begin to paint a picture of how do they behave, what do they do in their spare time, how are they spending their money in their spare time, are they showing off watches, are they showing off fast cars, what are they doing? Because it's not just the AI gives the ability not just to analyse the written word, as it previously might have used to be, image recognition, video analysis. All of this information can now be analysed at such pace, real time, to make an assessment of someone's character. Now then, might sound quite scary to some people, but actually there's a massive opportunity because we've all been there with people, especially over the last few years, because it's so hard for people to get on the property ladder, where the older generation is talking about their kids who are doing really well. They might have great jobs in London and earning well compared to their peers. And I heard this from my family just the other weekend when we were chatting. They're earning well, but because of the traditional way of scoring their credit risk, they spend highly because it costs a lot to live in London. They're spending £20 to go to work every day, and they're spending £20 on lunch, and then they're going out for drinks after work. So before they know what they've done, they spent £100, £150, £200 in a day, and they haven't really done anything of great note. When you see that on the transactions, they do not pass the credit, the behavioural checks that go through. However, now, if you can start to analyse actually how they manifest themselves in their characteristic assessment from a social media standpoint, it gives us a new element that we can start to layer into the credit assessment. So actually, there's a great opportunity there. It's not all bad. I use the tongue-in-cheek example of the £30 cocktails in Dubai as a really easy example, but actually there's a really kind of good side to it, which is if people are showing dedication and commitment to disciplines, ways of living in their social media, perhaps going to the gym every day, perhaps reading a lot of books or something like that, it paints a different profile to which might be portrayed in their credit report otherwise. So yeah, hugely powerful. What I'm really interested in, obviously this is your area of expertise now, but what I'm really interested in is these kind of technologies, once it becomes, well, it's possible now, but once it becomes a reality, how do we, from a end-to-end operations standpoint within the home buying process, how do we embed this within the process itself?
Well, I think we're starting to see the green shoots of, I guess, data and how data's organised and shared start to come through. There's a number of different groups now that have been put together to try to standardise data.
Yeah.
What's interesting is from the vantage point that I'm in and look at this, and they're doing some good work. There's no question about it. And notwithstanding that good work, I think there's potentially more that will evolve with this, because what the industry desperately needs, we've talked about this historically, this vertical transformation that's taken place that's now moving to horizontal. What that actually means is that we need a connected ecosystem. So what role is data going to play in that? Well, it's actually going to be mission critical, but there needs to be that single source of truth, because we're obviously collecting data at multiple points during this process, but a lot happens up front. And that upfront data that then is collected typically by the estate agent, the broker, and then it feeds into the lenders and then beyond. Here's where we've got this opportunity to start to create these data standards, and that's started, and that's what I refer to as the green shoots. To your question around, how's this almost going to evolve, I guess is what we're saying, and the opportunities that exist there. Well, the opportunities are big. The opportunity is that we're talking about it in the context of AI, credit scoring, and the lending decisioning process. That data needs sharing. And how do we do that securely, protecting the consumer within the constraints of, well, not really constraints, that's a poor word to use, but within the realms of the compliance and governance that are there for all the right reasons. But that's important intelligence, it's important information. And we there's vendors in market, we talk about source of funds checks, there's lots of things that go on during the application process, which actually can be done now by leveraging in data and information up front. And it's, obviously AI can play a core role in this. But again, I think we're a bit off it, but I think it could move quicker. But there's a significant opportunity there for organisations to start to leverage this. Yeah. But I think what's important with the groups that are starting to look at this at the upfront is to look at, well, how is this information going to be stored, structured, and then passed through that chain, and where can AI potentially help that decisioning as well, and sharing of that data in a secure environment. Going back to the credit scoring bit, in your opening statements and some of the things you mentioned before, you said that you gave the example of how there's a generation now that are earning more but actually find it hard to be able to get onto the property ladder. If we look at that a bit closer, is it that the way that things are evolving, that the decisioning systems are going to change, are going to be because of the access to information and intelligence that they're going to get?
Yeah, absolutely. I think they will. If we take this at a macro level, the UK is quite unique in its approach to home buying and lending anyway. And so I think there's definitely scope that things can be done differently, and it's proven around the world things can be done differently. Now, then, do I think we're going to see great behavioural changes towards lifetime mortgages or actually lifetime renting or anything like that? I actually think no. I think the UK, everyone you talk to in the UK at any age has, I say everyone, that's a grandiose statement, but the majority of people have an appetite to own their own home at some point. And therefore, with that, I think we'll maintain some of the behaviours that we've still got. However, the lending behaviour, it doesn't mean the lending behaviours
needs to evolve.
Yeah, needs to evolve. And actually, what we saw in the last sort of bubble of buoyant house purchases and sales, and lots of people moving house, and the ability to do that, wasn't necessarily that new home buyers were coming onto the market. What we saw was a massive push from the government to get new buyers onto the property market because of the environment we've built. It's next to impossible for first-time buyers to get onto the market without help And what I mean by help is perhaps inheritance, perhaps a windfall from somewhere or other to get that deposit money, because the cost of living is now so high that people cannot save at the rate they need to while living a life that they want to get onto the property market. And so what we saw was an increase in specialist lending, shared ownership, rent to buy, and all those other mechanisms that were artificially created to give people the opportunity to get onto the property market. Now then, where does this come in this discussion around credit scoring and different mechanisms that could exist? We now are entering a phase where technology can enable a different way for lending organisations to assess risk, because it's all about risk. When you get down to that lending decision,
absolutely.
It's all about risk. And so the reason we require a deposit, or lenders require a deposit, is to mitigate the risk of, well, actually, there's a history here that these borrowers have proven they can fiscally save money to get a deposit, so it lowers the risk. It's the reason that if someone's got a 50% deposit, they get a lower interest rate, right? Actually, technology now opens up the possibility for us to assess borrowers in a different way. And so we can now say, well, actually, the way they live their lives, we can tell that they're a safer bet because they demonstrate X, Y, Z behaviour, and we can analyse the data in that way, where previously we didn't have that ability. And so it opens up massive opportunities for different decisioning and different, I guess, business risk appetite is probably the best way of describing it, because of the technology we can now deploy. But we need to get there, right? We need to develop these technologies and then change the operational processes that sit within the lenders and the infrastructure and everything else.
But I guess
it opens up that possibility.
Yeah, and what you're describing there is essentially AI could democratise access to credit. That's essential. At a high level, there's an opportunity for that. And it was interesting because I was talking to a lender that's coming into the UK market just a couple of weeks ago, and the products that they're bringing to market are unique. They're kind of very different than traditional products in the UK market. And what I found quite interesting in that conversation was actually the demographics for which they were starting to look at.
Yeah.
And it is this, and the way for which the application process would go through, it's all completely different to the very traditional way that it's being done at the moment. And it's interesting because they're very forward thinking, they're very sort of technology first. The way that they've kind of enabled their infrastructure and the platform that they're bringing in, it suggests to me that we are on this kind of, we've been seeing a change for a long time. We've gone through the first phase of transformation in this sector. But I spoke to a group just the other week, last week actually, where I sort of laid out to them, look, here's the current state, and look, here's the future state. And there were some challenges back to me about that future state in terms of, well, when's that actually going to happen? And my answer was, well, it's happening. And it's happening kind of right under your nose, because it's not necessarily about the incumbents. It's actually what's coming in and the way that people are thinking, and this democratization of things. If AI enable it, will enable it by the sounds from a credit standpoint. But it's the thinking of people that are coming into the market and saying, do you know what, I'm challenging the status quo. And I don't want to kind of scaremonger here, but this comes back to the bit at the start of this podcast where you were talking, and and I said, look, the whole Nvidia thing and the ability for people not to be able to program, that's not what we need to be teaching people, computer science and coding. It's actually reimagining the way something's done. Let's explore the art of the possible. That's happening right now. People are exploring the art of the possible. People are saying, do you know what, I've had enough of it being done in this way. And if we look at any successful or highly successful business that's come and disrupted a market sector, which you and I have been paid to do for many years to come, how does this happen? How do we prevent ourselves from doing it? I mean, the answers are, success leaves clues.
Yep.
And those clues is that they've offered the same thing. They've just done it differently.
Yeah.
And I think when you explore the art of the possible and realise that home buying is being completely reimagined across all parts of this ecosystem, it's really exciting. It's really massive opportunity, and it's great to be around. But I also think that people listening and watching this, is take this seriously, but don't be afraid by it. but lean into this because it's happening, and start to kind of, think about use cases, start to think about the ways in which you are working, start to think about how could we reimagine this, just think about how. And I think to do that, you've got to get out of the weeds. You've got to get into that kind of helicopter view and look at this holistically and go, what could we do differently? And I'd invite everybody to do that. Keeping on that kind of how could we do things differently, let's just, as we try to do every week with the podcast, it starts to give people some sort of insights, some tips, tricks.
Yep.
What can they be doing to do this? This is, you live and breathe this stuff. We're obviously involved in a number of programs of work where we're looking at these sorts of things. What are your kind of, I'm trying to ask this question from the vantage point of multiple sort of vendors, stakeholder groups, not just sort of lenders or anybody, but everybody within the ecosystem. So looking holistically at this, how should people be looking at AI? We're talking specifically about sort of credit score and lending decisions and things like that. But let's start at the bigger picture. How should people be looking at AI? First, let's start there before we then drop down into the other bit. So across the board, how should people be looking at it, and what should they be doing?
The first thing to do is identify the problems and the opportunities. I'm a firm believer that we don't need to fix anything that's not broken. However, there's always different ways of doing things, as Henry Ford taught us, and the old horse. If you'd asked people what they wanted, they'd said a faster horse adage. But people always know that there's opportunities to do things faster, i.e. if lending is an easy one just because I'm slightly close to it. If we could lend more money, then on the interest, we would earn more money. However, the traditional way of looking at things is, well, we can't lend to people unless they've got minimum 10%, 20%, whatever their rules are, right? We can't lend to people with no deposit because that's just the way it is. Challenge the way that the things are currently done, challenge the status quo.
Yeah.
Now that applies across the industry. When it comes to conveyancing, why is it that we have to go through the process with wet signatures? Do we need wet signatures? Actually, no, we don't. The digital signatures might work fine. Challenge those questions that are just embedded into the process, because that's always the way it's always been. That's where the biggest opportunity is going to be. Equally, people always have the pain points, always have the problems. Pull those out, map them out.
So let's dig into this from a lender perspective, because again, we both do, but I mean, I certainly get to see feedback from certain areas of market where it's sort of, well, this is lender driven. The lenders need to move first. They're the ones with the, the legacy stacks and platforms and everything else. What can lenders be doing? How can they accelerate this?
We always talk about that innovation process of testing and developing proof of concepts. That's absolutely what lenders need to be doing.
And is this the adage of really when we talk about this, maybe using things like synthetic data to try to kind of move this quicker?
Yeah, absolutely. Now, when it comes to synthetic data, one of the biggest constraints when it comes to AI is trainable and trainable data, because you can't just strip out your database of customers, throw it into a large language model and start going, right, learn how our customers borrow. You can't just do that, because there's GDPR, there's leakages in the system, there's all sorts of problems that you've got to cover. Now then, what you can do is develop and harvest data that is trainable, but you often don't have enough. And so actually what then becomes a requirement is to develop synthetic data, which provides you with, data that's not real, but that is trainable. Now then, that sounds like an oxymoron for anyone who's not necessarily close to this technology, but essentially you're harvesting or developing, using artificial intelligence to develop data that looks, for all intents and purposes, to a computer like the true
real
data.
thing. Yeah.
However, from a data protection standpoint and from a personal data standpoint, we're not using real data, which means that there's no risk of GDPR, no risk from a compliance standpoint. But it allows us and gives us the tools to therefore begin to build and develop and test things from an AI standpoint and from an engineering standpoint to develop these proof of concepts quickly. and test proof of concepts quickly, because that's the biggest problem that we've got at the moment is access to data to train and then access to data to then test the models that we develop. So that's how I would use that.
So as we start to draw this episode to a close now, because we've gone, we could go, there's so much stuff that we could go into here. We've talked about sort of how sort of lenders could do this. We've talked about looking at it holistically from people across market. We talked about the threats. We talked about the opportunities that exist. What would be the top 3 things that you would say to people to go and action like right now? We're coming towards the end of Q1, moving into Q2. What can people get done in what are the 3 things that people need to get done in Q2 to kickstart this so that they can actually start to play a part in reimagining sort of the home buying process and leveraging this technology?
Testing proof of concepts when it comes to AI, not just in credit checks and risk and that side of things, but generally in the home buying process. If you're not testing things when it comes to AI, you are going to be left behind, because there are upstarts that we are talking to who are testing things in the process and are ready to come and eat the market's dinner. However, the incumbents have all the opportunity, so you test. AI is incredibly accessible. The biggest blocker to accessing AI is actually legal teams and the ethics that sit around it, because they don't know how to mitigate for it, because there's nothing, it hasn't been here before. Find a way of testing, whether it's with closed data, whether it's with synthesized data, whatever it is, test, because knowledge is going to be power at this point, and speed and to react to market dynamics is going to be crucial. That'd be number 1. Number 2 is collaborate. Start to talk to your peers in the market. Start to talk to the other organisations. If you're a conveyancer, go talk to your lenders, go talk to your brokers, go talk to your panel manager, whoever it might be. Start to understand what they are doing, get involved, be part of the conversation, because there's big changes in the marketplace.
This isn't a watching brief, is it?
No.
You need to be a player in this.
You need to be a player. And thirdly, if you don't know how to do it, go find someone who does. You guys who are listening to this are experts in your fields, absolutely. You're experts in conveyancing, you're experts in lending, whatever it might be. But there are people out there who are very, very close to this technology, who are also very close to the market. Not just us. Obviously, of course we are. Of course, come talk to us. We love to collaborate with the market. But go find people who understand this technology and how it's being leveraged to help show you how the use cases, the innovations from around the world, the innovations from other markets, but bring it back to the UK home buying market and make sure that the problems that we're facing in the market are actually being addressed, because customer experience, as you said right at the very start of this podcast, is suffering right now. And we all know that customers are incredibly fickle at the moment. They've got access to huge amounts of options. The home buying market has been a traditional one in the fact that it was protected. That's not going to be the case for long. And so we need you then need to bring that back to the people who understand the home buying market, when you've got an understanding of what's possible, to then make it a reality. They've been my 3 tips.
Pete, as ever, thank you very much for your wonderful insights in this episode. That does conclude this episode of the Digital Disruption podcast. If you want more information around artificial intelligence in around credit scoring, lending decisioning, Pete is your guy to talk to. You can hit him up on LinkedIn and slide into his DMs, and I'm sure he'd be happy to give you some insights and share some of the stuff that he's involved with to help you. But for now, thanks ever so much for tuning in to this episode, and we will be back with you next week.